Today, as expected, the European Central Bank decided to hold interest rates at their current low level. It's raised rates twice already this year by half a percentage point. The thing that caused some surprise today was the decision by the bank to extend its controversial and unorthodox policy of buying government bonds. This is something that usually central banks don't do, but many central banks have done over the past 3 years because of the nature of the crisis. The ECB started doing this in May last year, but stopped about 4 months ago, and there has been some pressure on it to resume that policy with the intention of bringing down the yields for countries whose bonds are being sold off. Those countries include the 3 bailed out countries, Ireland, Portugal and Greece, but in recent weeks the bonds of Spain and Italy have come under pressure, and there have been calls for the ECB to intervene in those markets to try and help Spain and Italy. Earlier today, the head of the European Commission, Jose Barroso, came out and urged member governments to do even more than they did 14 days ago when they had an emergency meeting to try and address the crisis in the Eurozone. What was significant was that very quickly he was rebuffed by the finance ministries in both Germany and the Netherlands, two of the stronger countries that would ultimately end up footing the bill for a rescue for weaker countries. So we're in a position where the more radical measures, such as those proposed by Barroso, have been rejected by Germany, the strongest country. And Germany also came out today and said, the head of the German central bank said that he opposed the ECB's policy of buying government bonds. So there clearly are very big differences that remain within the Eurozone on how to deal with the crisis.